Thursday, September 25th, Stan Ehrlich, market analysis. I start out with the indexes, go to futures and also some stocks and a few commentaries. Now, as you well know, over a month ago, I started talking about the market topping out very often in September because there is a low in October referred to as the October lows. There's one of the most liable historically since 1993 when the S&P 500 SPY started trading. Seasonal, quote unquote, market turns about 90% plus, depending upon how much of a low you think is a worthwhile lower low. Many of these lows I'm referring to in October are extremely profound. And I think we have a setup this year which could very well cause another whopper of a break into October. I've only seen a little bit of a start here from the rally highs that we saw on the E-mini, which was Monday of this week. It was simply overbought. I didn't get any reversals. Started to slip Tuesday, a little bit more yesterday, and again a little bit more today. 3 points, give or take a little. Not a lot, but the low of the day is a new low for the last 5 days. And if we start closing below today's lows, we will probably close below the low 5 or 6 days ago, or at least on the date of September 17th. And then you're adding another 3 more days to that list of days that you're closing below the lows. And you're approaching one of the first support areas right around 65.72. Not that big a deal. I don't, frankly, expect it to hold, maybe a little bounce. The real support is going to be down in the ballpark of 63.36 to 63.01. Those are the lows and the highs in general that we saw July. So that's where we're heading, in my opinion. But frankly, I'm not even sure they're going to hold. So let's get there first and see how they get there and what happens in the process, if I'm right to begin with. Next, MES, the ES, not a bad close, but, I don't like it when I really close on the low of the move. Often, that's a turning point. Well, George Lane, Mr. Stochastic, taught me that. That's one of the things stochastics and other oscillators tend to point out when they get overdone, which we did on the upside, several days ago. So here we are, starting to make new lows on this 5-minute chart for a few days. We didn't really break the low made at 11:30 or so, 12 o'clock it was actually, on September 17th. Again, this is the MES. That's going to be pretty important. Next, we've got Spider. We did have a bearish engulfing ER sell signal, and so far it is the exact high day of the whole trend up. So it may stay that way. I was hoping to get more than one, but hey, can't make the market do what you want to do. You can't make the market do what you want it to do. You always have to move with it. So here we go. Almost new lows for several days, looking for lower levels, not much support until you get down to 640, and that's not all that big a deal. Looking for lower lows. Explanation point, let's see if I'm right. The fail-safe is a tick above Tuesday's high for the SPY. Next, we bounced off a little support today, but it's very minor. And the next level is still not that big a deal. So we've got, I think, something started. That's what I'm talking about overall with the indexes. Overbought conditions with the QQQ, no reversal, just testing various minor at the moment support levels, no big deal. I do think because RSI is now starting to head south that we have lower levels in front of us. I will draw more, annotate this chart more in the near future. Another support area is around 560. The lows more exactly is on August 20th and the low on September 2nd. That range. And it's a very tight, small range. And it correlates with some other evidence back in time as well. Why don't I draw the damn line stamp? That would be a good idea, wouldn't it? Of course it would. Tick. And go back over here, and that's about right there. So, next chart, 5-minute data, dropping off, but it's only the start, in my opinion, just 2-3 days worth, and not a new low for any major number of days so far. What about the NASDAQ? Same story, no reversal, and then anything except the SPY, but we're approaching, not there yet, a minor support level. Goes back 2 months at the most. To the top of a bearish engulfing that we had before that produced a big break all of a sudden, but only for one day. That level, that low, does represent historic good support going back to July. So now we're talking basically 3 months back, a quarter of a year. Then there's others, of course. Next chart, 5-minute data, sinking, nothing particularly profound about anything except that lower lows, lower lows, lower lows, and of course lower highs for a little bit, but this is only a 5-minute chart and it's only a couple of days. Next, we have the YM, same story, but we did bounce, and this is the only index, into a small level of support, in my opinion. So if this stabilizes, and that's the best I can think of, for a day or two, maybe less, I wouldn't be surprised. Come off a little bit more. This is a new low and a new low close also for at least 5 days, 6 days, about 6 days it looks like. Well, 5 at least. Next, 5-minute chart. And the Russell starting to pull back, overbought, turned around, new lows for a few days, really has to test, fail to hold nearby support levels just under the market. Russell 5-minute chart. Looks a little weaker than the others, a little quicker. Okay, what about bonds? Well, I still got the exact high day on September 17th, a bearish engulfing ER sell signal, and it's solid red. There we go. Today is another new low, a slightly lower close, relatively steady on a closing basis now for the last 4 out of 5 days. So I want to close a chunk lower and, of course, below today's lows real soon, ASAP. 10-year notes. We've also got the highest high for the rally with 2 bearish engulfing ER sell signals involved in the topping out process. And I told you sometimes I even see 3. 4 is extremely rare, maybe once a year. So 2, yeah, I'm not surprised. New low close, clearly even more so than bonds. Next support level down to about 111.22. Next, we're testing resistance on this rally in crude. Maybe it'll get up a little bit more. I think stall out. We're close to overbought. We might get up to the upper end of the resistance at 67.55-ish before it turns back. But we're still between a rock and a hard spot, waiting for a signal. Minor amount of friendliness on a scale of 1 to 10. 3. Next, natural gas. Another little up day, but we just finished testing the lowest low for the whole trend. Remember, my minimum downside objective on natural gas is now adjusted slightly because we're shifting to the November contract. Now I'm raising it to 1.5. I believe a couple of months ago I had a 1.1, then a 1.3 or 2, and now I'm telling you 1.5. But that's still a heck of a lot lower. If I'm right, huge. Now, this broke out way back June 25th. Had the retracement, talked about that. Oversold conditions, final turning point, the amount of the rally and the resistance, talked about that. So far, I'm pretty much right on with natural gas, so I hope that continues. Next is heating oil. New high close, a week or two, no particular signals, just simply bottom out on a one single day of being oversold at a support level. One of my favorite combinations. So how much higher? Well, we're getting close to overbought, and we've got a significant number of highs relatively recently in the last 3 months, a little bit higher. So I don't think it's going to go anywhere big time on the upside, and I'm looking for a top so soon. Gold, overbought, turned around, came back a little bit, didn't do too bad. This is pretty strong. Pretty strong. I wouldn't be surprised to see new highs again. I got no sell signal. I got no reason to believe it's going to top out big time yet. If we start closing below 36.54, that's a different story. Next, silver, pretty much the same thing, overbought, so maybe it'll turn down a little sooner than gold, but more likely they're going to do it together. Looking for a minor turn down. And platinum. Guess what? I'm going to have to say the same thing, except I've added to this chart now an upside objective based on the pennant formation. There are two ways to measure an objective on pennants. You take the depth of the back of the pennant, so you measure for the highest high to the horizontal lowest low at the back of the pennant, and that would be this distance right there to right there, which equals my little dotted dashed yellow line. So I am looking for about 1693.40. Yes, let's call it 1690 and small change. New high close, overbought, so I'm expecting a minor downside retracement that should hold about the support level or a little lower the previous bear trend line across the top of the pennant. Next, copper finally popped up yesterday, had some follow through on a rally today, second day overbought, and closed lower. Now, normally that looks a little bit bearish, but it's not particularly decisive, and I wouldn't be depending upon it as any particular kind of signal per se. But coming down to support, a little bit lower, back to the support resistance zone, wouldn't surprise me. We'll see what happens there. Copper, I think, is pretty much in big trouble, intermediate to longer term, and I wouldn't be surprised to see new lows within weeks. Next, grain complex. Soybeans actually hung on with the doji today, closing a hair higher. No big deal. I need to start to see new highs if I'm going to continue to think they're bottoming out in the whole grain complex. A few days ago, it broke into new lows for a week and a month and a half, and that was kind of discouraging. But it didn't kill the longer-term big picture. Next, soybean oil is the same kind of story, except it did bounce off the support and oversold Tuesday. Came up a little. Nice, nothing great. Need to see it close above 53.90, then above 56.11, and finally, of course, new high for the trend. Now, I had earlier been talking about a head and shoulder bottom, double shoulders, but it dropped below the neckline 3 times. So I had to abandon the pattern. Other features like gap closures, that's good enough. I kill that. Have happened. There's a decent chance it could turn up here big time. I'm not super confident about it. 1 to 10, I'll give it a 6. Meal. Oversold third day in a row. Maybe it'll come off a little bit more, but I think this has a good chance also of turning back up again soon. But it's got to do it in a substantial way, and it's got to start to close above, let's say, 290 just to start. Then you've got all of these major resistance areas at substantial levels higher. So riding it up even into that would be a hell of a good trade. Looking for a turn up. Next, a little bearish engulfing, or maybe it actually closed 1.5 higher. So, forget that. Basically, the trend is down, and corn did hold a few days ago at a little bit of support. I'm neutral. Wheat, trying to justify bullishness, didn't get oversold, came close, but that doesn't really count. And we're up a little. I need a close, definitely above 537. Next, we got Shell between a rock and a hard spot, and it might rally up a little more to test resistance again. It just finished testing support and passed the test pretty good. So, bouncing around like a ping pong ball here a little bit. Next, Apple, overbought, tried to make a new high for the move today, didn't do it. Has, in the last 4 days, highs at very close to the same price levels. That's the resistance zone. We still closed around it, at it. We still have a gap to close lower that was at the beginning of the week on Monday's up gap. There's no big support underneath the market until you get down, I don't know, 225. Looking for a turn down. Next is Tesla, overbought, started to turn down a little. New low for about 4 days. New low close for about 3 days, 4 days. Not that big a deal so far, but it does have that gap to close below the market. And therefore, I'm looking for that have happened first. And that's 397 fraction. Then there's another little gap down there, and that's the beginning of decent support. So it wouldn't surprise me, 370. Next, NVIDIA. Resistance level stopped it really perfectly on Monday. And I told you about that and what to look for. Sure as heck happened on Tuesday, a little bit lower on Wednesday, and today a new low for a few days, but it did close steady, up a little, $0.50. And I'm still looking for a little bit lower levels. Now, if it closes below the lows of the last 2 months, that is going to be a bit of a bearish breakout. And the reverse, of course, is a 190, 185 close, I guess it is. And that would cause an upside breakout, which is with the long-term trend. A little bit more oomph to it, so to speak. I don't think that's going to happen. We're back to the E-mini. You guys have a great day and profitable trading to you.